Hey traders, this is Jeff from ZenTrader.ca. The day just got away from me. Sorry for the late video. I wanted to recap my timing signal. It did go back to the sidelines after the explosive move on Friday. It's really difficult to trust this move, but it is what it is, and it's a powerful move up. And it's pushed my signal to the sidelines. I don't want to jump the gun now and say, go long. And that's one of the reasons why I've included the sidelines move, because we could just as easily get whipsawed, and I don't want to compound the mistake that was to go short here. Luckily, this is not that much of a move to find out if this short trade is going to work. Well, actually, it would have been here. Yeah, right there was where the short move was, and it just basically did the complete opposite. And you will have those. This is, as you can see, this is not a trending market. This is mean reversion. It gets up here, goes back. It's down here, goes back, and it's miserable for trend trading. Unfortunately, you never know which the next signal is going to give you a 200-point move on the Nasdaq, so you got to just deal with these little whipsaws and move forward. One thing I just noticed like 2 minutes ago, and I'm kind of surprised no one's talking about it, is this is a Nasdaq. This is a daily chart. Is this head and shoulder pattern is forming, and it's about to negate it. And one thing I've noticed about head and shoulder patterns recently, I've just never really studied these patterns a whole lot, but when the moves are invalidated, so a move above this right shoulder would invalidate this. Oftentimes, sorry, there's a pretty big move in the direction that invalidates that particular chart pattern. I mean, this chart pattern could still play out. Doesn't really look like it's going to, and therefore a move above this right shoulder could really add some fuel to the fire of this move. So that's something to watch. You can see that the 200-day moving average really did its job. This is pretty much the last defense of an uptrend turning into a downtrend, and it did exactly what it's supposed to do. It provided support. So what I'm looking for in a nutshell is, for my timing signal to turn green, it's either going to A, require more of a move up and then a small pullback, or a sideways consolidation and a pullback without really giving back too much of the gains that we've seen here. So what I'm looking for is, if the markets were to pull back right now in the Nasdaq, maybe down to 29.20 would be a good level. It's basically, my timing signal is looking for a calm retracement back, nothing too volatile. So right now, the sidelines is the best play. Let's see some good quality setups appear on the scans. If we don't get that many setups, and this move, a good bit of this move is given back, that could potentially initiate another sell signal. At this point in time, I'm just going to be watching from the sidelines. I may, if I start to see some stocks that I like setting up, I may dabble on the long side. But other than that, let's see here, the Dow chart, I'll be looking for a pullback. 12,850 was the level that I was really looking for. This could provide some support if we pull back to it right here. If we go up further, if we have another couple explosive days coming out beginning of this week, I would be looking right around this 1300 level for support. I don't want to chase into this move. I want to see a pullback or a sideways consolidation. And then the last chart here, the VIX, we're right back on the wrong side of the 10-day EMA. If the downtrend were to resume itself, it has to bounce like tomorrow. I don't know what the futures are doing. I didn't pay attention, but we need to see some selling pressure to get back on this side of the this moving average. I didn't expect as big of a move up in the markets, and that's really drove volatility down, and it looks like we're heading back down to the complacent zone, and that can persist for longer than you think.